Atlanta Fed President Raphael Bostic is being probed after some of his financial transactions violated the FOMC's guidelines, and his financial disclosures contained some inaccuracies. Now, even though this doesn't impact inflation, do you think this cuts into public opinion and trust in the Fed?
Yeah, of course it cuts into public opinion. And by the way, my speculative guess on him is Raphael is gone. He's going to retire. No, this isn't the first time it's happened. The Fed just put in new ethics rules effective May 1st of this year, and he's already broken them. They put them in effect essentially because last year you had the Dallas Fed president retire early, Robert Kaplan. You had the Boston Fed president retire early, Eric Rosengren, and you had Fed Vice Chairman Clarita resign, all over trading issues. So the new rules, which went into effect May 1st, and I'm just going to read from this Fed statement, aim to support public confidence in the impartiality and integrity of the interest-setting Federal Reserve Open Market Committee work by guarding against even the appearance of any conflict of interest. He's gone.
Whoops.
And it doesn't. Well, I don't think the public cares. The public doesn't trust the Fed anyway. For the most part, it pains me to say this, but the public doesn't even know what the Fed does. The public doesn't know that the Federal Reserve System is a private central bank, doesn't understand that it attempts to manipulate the economy for the benefit of the big banks who own it. So there's a lot about the Fed that doesn't really hold water in terms of what I think they should or shouldn't be doing. I don't think they should exist. We're better off with a Taylor rule, but I don't think the public's going to care. They'll just say, just like politicians, they're out for their own gain, and they wouldn't be wrong.
Does this get quietly swept under the rug to divert from their focus and their resources?
Yeah, absolutely. It has to get swept under the rug because it is certainly a sideshow. It's a bit of a circus that this would happen, especially on the heels of the new rules going in effect. And as far as ethics go, this is a complete lack of ethics, and it will have to be swept. I don't think they're going to make a hard showing of punishing him in any way. I think he'll retire as Kaplan did, as Rosengren did, as Clarita did, and that'll be the end of that, and no one will talk about it anymore. So they have to bury this quietly because they have other more important things to manipulate.
All right, let's stick with this theme. On the 11th, October 11th, Janet Yellen said that she was not seeing anything in markets that causes her to be concerned. Then the next day, turned around right away and said that she is concerned one day later about the loss of adequate liquidity in treasuries. So are we heading for a bond crisis here? And what gives, Janet? You changed your mind in 24 hours. You'd noticed this all of a sudden. Shah's been talking about this for several weeks.
I don't understand the flip-flopping there. She's certainly aware as Treasury Secretary of what is going on in the bond market. She has to be. So we'll give her credit for that. I think it's just politics trying to calm markets. I'm not sure what she was doing. The fact that the statement about concern about liquidity is telling, because the Fed has been concerned about liquidity. The Treasury has been concerned about liquidity. Traders are certainly concerned about liquidity. There aren't enough treasuries to trade, and the Fed has been doing repos in order to provide enough treasuries to the market players who need it. So there is a definite liquidity issue, and it really stems from, for the most part, the Dodd-Frank Act changed a lot of what big banks and dealers could hold because they had supplemental reserve requirements, et cetera, et cetera. So they are now less in the market. Now, there's going to be more treasury issuance coming, not less. And there are fewer players to take larger positions. The Fed is not going to be the buyer of first and last resort anymore. It's essentially going to step aside. We're going to start to see liquidity issues manifest themselves in down days in the markets, and we're going to see some nasty moves.
What's a bigger issue, the liquidity issue in the market, or the crisis of confidence that can obviously swell among market participants?
Well, crisis of confidence leads to liquidity issues, but liquidity is much more important because illiquidity is the last step before insolvency, and that's something that every trader who's trading, whether you're trading equities or bonds or anything, needs to be aware of. That when you have this kind of the liquidity issues we're seeing in the Treasury market, the largest market in the world, by the way, other than, pardon me, currencies, and I'm talking about all currencies. The U.S. Treasury market is the largest market in the world. And if we have liquidity issues there, that speaks to larger systemic problems. And this is what I've been talking about in terms of stuff is starting to break, is going to break. And this is a serious issue. The liquidity issue is a very serious issue in the Treasury market.
We saw Bullard talk about the Fed front loading, possibility of a 75 basis point hike now in December after the expected 75 basis point set for this November. Are we at a risk of overcorrecting now, as some have suggested?
Yes, I think we are. We're not going to overcorrect in terms of trying to defeat inflation. We can't possibly raise enough in trying to defeat inflation, because no matter what we raise, we're not going to defeat it. So yes, in that sense, I understand where they're coming from in terms of the rhetoric. But yes, they are going to front load. If they do overly front load something, perhaps a few things are going to break. And that's what worries me. They're not going to defeat inflation with a couple more 75 or 100 basis point hikes. So they are going to break systems, and that's going to be the problem. So I think they are going to go too far. And that's what worries me most.
While all this is transpiring, the dollar continuing to get stronger and stronger. We're watching the dollar index. That's been the top performing asset of 2022, which is mind blowing when you take a step back. What do you think the impact is on the global markets if the dollar continues to rise?
It's going to be problematic. It's already started to show. Emerging markets have held up remarkably well, but for governments, countries, corporates that have dollar-denominated debt, the higher the dollar goes, the more their interest payments cost them, because they have to translate those into dollars with their currencies. So we're going to see stuff break there. And I'm not just talking about emerging markets. I'm talking about developed economies also. The impact of the dollar, the higher dollar there, is going to start to impact trade imbalances, and it's going to have large economic repercussions. And none of them are good.